Hi everyone. Today we are going to discuss about tax planning in the case of repair or replacement of renewal. We want to consider the we want to while taking the decision we have to consider some following cases. If income is less in the relevant assessment year, it is better to slow down the pace of repair and renewal in such manner that it is spread over a number of years. If income is high, it is better to fasten the process. And the second case is it is better to replace a part of asset instead of entire asset. If there is a replacement of a part of asset, then the cost of replacement may be allowed as deduction for computing income tax purpose. Okay, there are two cases for tax planning in the cases of repair or replacement of renewal. Then, what is export or domestic sales decision? The income tax is paid on the net income earned in the export transaction. Exemption given when export is done through special economic zone or export processing zone. Liberal decisions are allowed for export and setting upon new industrial undertaking under certain circumstances. Deduction is available under section 10AA. Okay. Then, shutdown or continue decision. A shutdown point is a concept in managerial economics that suggests a business should at least temporarily stop production. There are certain various reasons. It may be low demand of the product, mismanagement, financial problems, changing technology, high rate of taxes, etc. While taking decisions, tax implications in this respect is to be considered. There are two cases, business loss and unabsorbed depreciation. In business loss, if the business has discontinued loss, it can be carried forward and set off against profit and loss, profit and gains of business or profession. Then unabsorbed depreciation. If business has discontinued, the unabsorbed depreciation can be set off against income from business or profession and uh, carry forward and set off for indefinite period when business is carried on or discontinued. Okay, once again, while taking the decisions in tax implications in this respect, two cases are considered. One is business loss and another is unabsorbed depreciation. In the case of business loss, it can be carried forward and set off against profit and gains or business or profession. Okay, then unabsorbed depreciation. If business discontinued, then unabsorbed depreciation can be either set off against income from business or profession, nor carry forward and set off for indefinite period whether business is carried on or discontinued. Then carry forward and set off of business losses. There are certain 10 cases that how to carry forward and set off of business losses. First case is carry forward of business loss, section 72 subsection 1. In this case, business loss can be carried forward for 8 succeeding previous years to be set off from income under the head profit and gains of business or profession. The loss under business head except speculation loss shall be adjusted against income from any other head in the same assessment year. If the whole business loss cannot be set off because of insufficiency, it shall be carried forward and set off against income of business or profession and carried on the assessee and assessable in that assessment year. The main point which is to be noted that thus business loss can be carried forward over 8 subsequent assessment years and set off wherever profit are available, provided the same business is continued for which loss was originally computed. Okay. And the second case is carry forward and set off of losses of certain companies. It included in section 79. Section 79 of Income Tax Act 1961 deals with carry forward of business losses for certain classes of companies. Okay. Worth change in shareholding take place in a previous year in the case of company not being a company in which the public are substantially interested, no loss incurred in any year prior to previous year. Okay. The main point is one of the last on the last day of the previous year, the shares of the company carrying not less than 51 percentage of voting power were beneficially held by person who beneficially held shares of the company not carrying less than 51 percentage of voting power. Then third case is loss from business specified under section 35 AD. Loss from business specified under section 35 AD cannot be set off against any other income except income from specified business. This section is applicable in respect of specified business like cold chain facility, setting up and operating warehouse facility for storage of agricultural purpose, developing and building a house project, etc. Then the fourth case is loss from business of owning and maintaining race horses. Loss from business of owning and maintaining race horses cannot be set off against any income other than income from business of owning and maintaining horse race. Such losses should be carried forward only for the period of 4 years. Okay. Then fifth case is loss from speculative business. These loss from speculative business can be carried forward only if the return of income or loss of the year incurred before the due date of furnishing the return. Such losses can be carried forward for 4 years immediately preceding the year in which loss is incurred. Okay. The sixth case is provisions under which income tax law in relation to carry forward and set off of house property loss. If loss is occurred in the income from house property, it cannot be fully adjusted in the year in which loss is incurred. It is unadjusted loss can be carried forward to next year. Okay. Next, provisions under income tax law in relation to carry forward and set off of capital loss. If loss under head capital gain incurred during a year cannot be adjusted in the same year, then unadjusted capital loss can be carried forward to the next year. Such losses can be adjusted only against income chargeable to tax under the head capital gains. However, long-term capital loss can be adjusted only long-term capital gain. Okay. And the next case is provisions under income tax law relating set of unabsorbed depreciation, unabsorbed capital expenditure. The depreciation is first deducted from income chargeable to tax under the head profit and gains of business or profession. If depreciation is not fully adjusted, it carry forward to the next year. Okay. Next case is carry forward of loss in the case of constitution of business. Normally the person incurring the loss is only entitled to carry forward the loss to be adjusted in subsequent year. In certain cases, the constitution of the business like amalgamation, demerger, conversion of property, proprietary firm into company or conversion of partnership firm into company, etc. And the last case is loss from exempted source of income cannot be adjusted against taxable income. That is, loss from exempted source of income cannot be adjusted against taxable income. That means if income from particular source is exempted from tax, then the loss from source cannot be set off against any other income. For example, agricultural income is exempted from tax. Hence, if taxpayer incurs loss from agriculture property, then loss cannot be adjusted against any other taxable income. These are the various cases that how to carry forward and set off of business losses. So today we discussed about while taking the decisions, what are the two conditions have to be considered, and the export or domestic sales decision and shutdown or continue decision. Then various cases in relation with the carry forward and set off of business losses. Thank you.